Hello, good afternoon, students. Today we will discuss one of the main concept about accounting. It's related about the basic principles of accounting. Today we will discuss some points related about these fundamentals, and we will see the benefits of using them during life. Today, during our class, we will speak about many topics. Today, we will focus about some objectives. These objectives are related about many points. The first one, it's about the account, the meaning of account, the account, why we are using them, how to identify and classify accounts like assets, liabilities, income, expenses, equity, many such terms. And also, we go further and we will discuss the chart of accounts and how we use them in the sake of reporting, why we do need such statements in order to take the right decision at what point. And the last point, we will speak about some examples and practices related about them, very simple ones that you can use and understand such terms. Today, we can start our class with one of the main points. Can you name some of the items that we can work? What do you think? Think about one. If you think about that question, it's very important for you to note that we are recording many of the terms. If we record them, so we will be able to monitor them and follow them, check accounts, and sake of checking any errors, follow our. So, you will do have lots of that we can monitor, like sales revenue, sales at the supermarket, at the company, at the factory. Also, it's about the expenses which you used to pay during work. You are is wages during the work, any else, telephones, whatever. Also, you have to monitor very well. So, any other point like receivable, account difference, receivable, and also the cash flow in and go, good going, and the deposit you may put at different accounts of banks and instruments. So you have five. And the first point, meaning. It's very good for you to know that the account is the point or it has a common character. That character, like you have, for example, a cash account, space, whatever, so you can put all of the items together. Main points or types of financial statements with several points. We have three main ones, and we'll speak about them, about benefits, why they are important for us. The first one is about the income statement. So income statement, you are loss, which is very important. So you have to follow that. It's important to be very well you are getting profit or you are getting losses at work. So you are following things uh, monthly, quarterly, or annually, or even the system. So that has a lot of elements like revenue, cost of the goods, the goods you had items you had sold, also gross, all of the expenses. You want to know which is the net profit. That's number one. Number two will be balance sheet. Balance sheet is all of all of us, the owners' equity. So we are speaking abilities, equity, all of such factors will be one of the indicators that we may use in order to know the current situation of the company. So the assets will be items, belonging to the liabilities, also short-term and long-term ones. You have finally the shareholders, which has all of the equity, all of the owners' equity, all loans you have, whatever, you can put it in liabilities, as we had mentioned. And here you can see very well the share of the owners here. So we do have here, which has all but here equity will have the share of the. So it's very simple for you to have very well the situation. Number three will be very important for you to know that know the cash flow statement. Simply, we have to keep cash in order to be able to pay on mobiles, telephones, whatever, any of the commitment salaries. So we are keeping such cash and we are managing that through the cash flow statement. So cash flow will help us to see very well the situation of the company. Maybe we can put our plan according to that. And the last one is a statement of the changes of the owner's equity about their share, their equity, the return earning, whatever. Uh, so, sheet will be very easy for uh, to have a will equal all plus owners few of plus. So here, if we can see it on the basic balance sheet, let's see here we have assets, current assets, and fixed assets. So if we have assets like cash, we do have account receivable, we have inventory. All of such are presenting total assets. Non-current assets will has all of the fixed assets like equipment, prosperity. And when we will be equipment and so the total is 65,000. Okay? So on the other hand, we have to look at the abilities. The abilities, we have to explain that we do have current account things that you have to pay. Also, we do have a short term. So these we call 5,000, 3,000. So the total will be 8,000, which is very clear. If we look at the non, it will be a long-term loan. So here we put example. So you collect none have other side. So if I don't have the owner's equity, I can use my mind. 5,000. Okay. So I have the formula which says assets will equal liabilities plus owner's equity. So it will be very easy to guess that the owner can understand 65 minus 20 equal. So owner's equity, the capital of the equity will be very easy to understand. This we have this equation 45 something. To move on, here we will have some balance sheet, which is very important. We had mentioned before the income statement will be all of the revenue and minus all of the expenses. So you will see very well the net profit. So we have minus the expenses. So we know very well what we will gain. So the revenue and expenses here, example, we have sales revenue 50,000 and other income not be 55, which is very easy. So when we look at expenses we may use to pay, it will be about rent, salaries, utilities, supplies, depreciation for the machines or whatever we do have. So it will be extra many items. So the total of the expenses we paid during that month, it will be, we can here have it monthly or yearly. Here we had mentioned that for the year. So we collected all of the sales, revenue, whatever, all of the expenses during the year. To see by the end of the year if we gain net profit or net loss for here. We can see 55 revenue, we paid 30,000. So we can guess that the net profit will be revenue minus expenses will be 25,000, which is very simple. You can do such income statement very easy monthly or yearly according to the system of the company. Why it's very important for us to have such financial statement. It's very important to have such statements in order to take the decision. You know very well if your company is so will take a decision, maybe you will invest in that company. Also, it's very important to know the taxation, tax if that apply the limit of X. Maybe you can send a report about the financial situation, whatever. So it's very important for you to know that all of such aspect is very important in this session and to guess very well what's going on in the company from a financial situation. So it will help you to track the financial health if the company is going up or going down. Also, it will help you to take the decision to determine the limit of the tax, whatever we should pay. Uh, We had mentioned on this class, we had mentioned that we do income, expenses, equity, many terms we had explained in the class of today, and we will continue in the second class, inshallah, with other further in depth, and will give you more practices about such aspects. Wish you have a wonderful day, and we will continue in the next class. Wish you all the best, and see you in the next class.